and welcome to our new podcast, Lightcastle Live, where we bring you up close and personal conversations with industry experts and notable change makers making an impact in Bangladesh. I'm your host, Raida, and today we will kick off with our brand new podcast by exploring Bangladesh's vibrant startup ecosystem. Joining us today is Robin Butler. Robin is the partner and head of impact at Sturgeon Capital, which is a renowned investment firm based in the UK, known for its expertise in emerging markets. Sturgeon Capital also notably just made an investment in Bangladesh in Chico, just in quarter one of 2023. So, Robin, thank you so much for making time for us. I'm really happy to have you on our podcast.
Thank you very much for having me. It's a pleasure to be here.
I will get started with my question. In your experience, how does the startup ecosystem in Bangladesh compare to other emerging markets that you have been involved in?
Sure. But let me kind of set the scene in terms of which markets we have invested in. So today we have 21 portfolio companies across 8 different countries. Our core focus is Central Asia and South Asia. So we've made investments in Uzbekistan, Kazakhstan, Georgia, Ukraine, Bangladesh, Pakistan, the UAE, and also in Egypt. So quite a broad range of countries. And I think what unites all of those countries, whether it's Bangladesh or Uzbekistan, is that they're still at the very early stage of their digitalization. So you have this foundational layer of smartphone and internet penetration, which has reached a critical mass such that you can build significant digital businesses. However, the level of technology adoption across the economies and society, whether that's within businesses or consumers, is still relatively early stage. Certainly, if we compare it to really what would be sort of comparable markets much further ahead, whether that was, say, India, Indonesia, Brazil, Turkey even is another example of countries that have gone through that digitalization. And that have kind of gone beyond that prime stage where we see Bangladesh. So that's kind of broadly how we see all of our markets, and I think Bangladesh sits very, very squarely within that. I mean, you have this smartphone and internet penetration that is growing rapidly from a low base. You've had the adoption of, if you like, kind of really first level, so Facebook, WhatsApp, ride hailing, food delivery. And now what you're starting to see is the development of more sophisticated products and services. The reality of that for any business, whether it's selling to consumers or to businesses, is that there's a relatively long kind of education cycle when it comes to onboarding customers. So your customer acquisition cost is not so much that you're trying to attract them from another competitor, which is what you'd be doing in a more developed market, but you're actually trying to persuade them to shift from doing it the offline, paper-based manual method to doing it online, which can lead to typically longer sort of sales or onboarding or customer acquisition timeframes. But I think also creates a scenario where you end up with stickier customers as well. I can keep going off down that rabbit hole, but conscious that I know you had some other questions, and then happy to focus on whichever bit if you'd like.
Thank you. I think that was a very helpful, overview of. I really liked how you broke down, but in Bangladesh, so the struggle really is to onboard customers to our new technology-based platform. Against that background, how would you compare Bangladesh to the rest of the countries in your portfolio specifically?
So it depends which way you want to look at it. I think of the markets we invest in, I think where I see a lot of similarities is actually, interestingly, between Bangladesh and Uzbekistan. Although obviously very, very, very different countries in terms of size, geographic location, and in many other ways. However, both countries where from a macro perspective you have stability economically and politically, but also where you have this kind of young population that is really driving adoption of technology, as well as a sort of with the kind of growing GDP, that higher GDP per capita, enabling sort of greater purchasing power. But also with a very nascent venture ecosystem. I mean, the reality is for us, we're investing say 500K up to $1 million as an initial check. there's actually a very limited number of investable companies for us in either country at this stage. Now, the good thing for us is this is a kind of 10, 20 year investment thesis. So we don't need there to be companies today, but that is the reality that I think for any international investor looking at these markets, you're not going to find hundreds or even tens of companies that will fit the investment mandate of international investors. And that's a common theme we see across all of the countries that we operate in.
Right. Right. Yeah, that makes sense. Are there any specific sectors or industries in Bangladesh that you see as particularly promising or that are particularly attractive to investors?
So broadly, if we Sturgeon typically focuses on fintechs, B2B software, and marketplaces. Although we invest in other business models as well, as you mentioned, we recently invested in Chico, so that being more of an ed tech. I think when we look at Bangladesh, because of how nascent the ecosystem is, there's a lot of that base level infrastructure that needs to be built. I think there's a lot that can and will be done on the fintech side. Obviously, you've had the success of the likes of Bcash as building out more of that foundational layer. But actually, an area where we probably don't see as many startups as we would like to is in the fintech space. More broadly, if you kind of beyond that, if you take kind of the significant sectors within the Bangladeshi economy, whether that's ready-made garments, whether that's agriculture, whether that's education, I think all being areas which are attractive investment opportunities. Now, they're also very challenging to build for operationally. So we've obviously made the investment in Chico, and looking at a sort of other deals in those other spaces. But broadly, if you like, kind of looking for really the top 1% founders and that are building in a vertical which is big enough to generate venture type returns.
Right. Okay, that makes sense. We also analyzed in our Q1 report that like the industries with most deals that we've seen in the quarter were the ones that were building sort of working on the infrastructural development of the country. So that does make a lot of sense considering where Bangladesh is at the moment. When you are considering a potential investment in a startup, I know that you are also the head of impact at Sturgeon. How do you assess and evaluate the impact that the startup makes? Like what factors or indicators particularly do you look for to determine the potential impact and scalability of the startup?
So for us, we are both a for-profit and for-impact investor. We see the two as being interlinked and interchangeable. I think if a company is having a significant impact on its end users, bringing significant benefit to them, it will therefore be able to sort of generate revenue in a long-term sustainable fashion and scale, which will therefore enable the generation of returns. There are three pillars to our impact thesis and framework. That the first one being financial inclusion, so supporting financial inclusion either through investments in fintech infrastructure plays, also any business which is gathering data or enabling the collection of data to support lending to underserved or unserved consumers or businesses. The second pillar is creating employment opportunities. Whether it's Bangladesh or Uzbekistan or any of these other countries, you have this kind of bulge of the population that are just kind of joining the workforce at the moment. That really is probably the most significant opportunity for these countries, but it's also one of the most significant challenges. If you can't create employment opportunities for them, it'll be very difficult to maintain sort of societal cohesion as well as economic development. So creating employment opportunities for those individuals, and that's really where I think the role that technology can play is creating long-term sustainable opportunities. So not ones that are necessarily kind of at the bottom of the value chain, but higher value jobs which will remain and maintain long into the future. And the third is gender. So that's whether that's within our own portfolio companies or within the individuals that they serve, looking to ensure that we're supporting a more diverse and inclusive venture ecosystem as well as the wider societies and economies that we operate in. So those are the three pillars that we're judging against, and then it really kind of ties back into what I said at the beginning is looking at how is the company we're investing in really solving a fundamental problem for its end user, whether that is a consumer, whether that is a business, whether that's an enterprise or an SME. What is the fundamental problem that they're solving, and how does that how does sort of solving that problem, what is the scale of the benefit that it will deliver to the customer and potentially to their customers as well. So by trying to sort of distill that down, I think it enables us to capture both the impact opportunity for that company as well as the economic or revenue profit opportunity for that company as well.
Yeah, that makes sense. I think all three of the explanations you gave for your impact measurement, I think you can clearly see how they would lead to scalability of the startup as well. In your experience, what support or infrastructure does the Bangladesh startup ecosystem require? I know this is a very broad question, but if you could perhaps say in the next 5 years, 3 things. What do you think would be, legislature-wise or even ecosystem support-wise? What do you think are the 2 things that you see really needing to scale up before our ecosystem really levels up?
Yeah, I mean, I think probably the key one, which you could almost put as number 1, 2, 3, but I won't do that because that's sort of skipping the question, is really the supply of funding available to startups at every stage of their development. I mean, I think if you look at, I was seeing a statistic the other day in terms of, if you like, sort of venture valuations as technology economic value as a percentage of GDP. And it was looking at it was comparing Brazil, Latin America versus, say, India and then more developed markets. And Brazil being at about 1.5%, India being at about 15%, and more developed markets being at, say, 20 to 30%. Now, I think if you look at Bangladesh today, it'll be a fraction, absolute sort of tiny fraction of GDP. The reality is, to unlock greater sort of technological innovation and value creation for startups, it requires funding. It requires funding all the way from the angel syndicates, the local investors, the pre-seed, the accelerators, whether those are local or international, flowing then into more this kind of seed and Series A investors, which can be a hybrid of both. And then also the creating a more, if you like, welcoming environment for later stage growth investors to be allocating to Bangladesh as well. So really building out that supply of capital. And that then probably ties into kind of the next bit. Now, really, it's probably the next one is having the founders that can actually raise that money. I think there is a good kind of crop of, if you like, first generation founders in Bangladesh at the moment, for whom the majority of whom it's if not the first startup they've worked at, almost certainly the first startup that they've founded. So there's a lot of kind of lessons being learned, mistakes being made, which are truly invaluable. But it's kind of, I think over time, what you'll see is the sort of second generation founders, those that have already founded a business, or I think also as well, if you can tap into the diaspora, and what we've seen in other markets, a very effective combination being a diaspora co-founder and a local co-founder. So the local co-founder who really knows how to get into the weeds and operate in the local market, combined with a diaspora founder who has that international experience working at other startups, who understands sort of interactions with international investors as well. So I think if you can build out that pool of founders, which again will be helped by there being more funding available for them to take the leap and to actually found a business. The third one, and I kind of touched on it maybe, would be that sort of the regulatory and sort of legal environment to encourage investment. And I think that's true all the way from the kind of angels, making sure that angel investors locally are incentivized to be investing in startups, whether that's sort of tax breaks or opportunities like that, all the way to sort of international investors. And I mean, typically that's solved by having an international holding company, which satisfies most of the concerns that international investors have. But the more clarity and simplicity there can be around the legal and the regulatory framework within Bangladesh, that will only assist or reduce any hurdle to investment. Because what you don't want is someone to have found a great opportunity, but then come up against so many legal and regulatory hurdles that they go, you know what, this just isn't worth it.
Right. Yeah. Like Kessel, I think we've had the opportunity to collaborate with multiple stakeholders. And I think this is the one point that gets repeated over and over again, the need to upgrade our laws and regulations to sort of facilitate startup ecosystem and funding in general. But dragging it from one of your points, which is that we need more mature founders and sort of like a second generation founders, like you said. When you are looking to invest in a company, what sort of traits or qualities do you look for in the founder? And conversely, what sort of traits in a founder do you sort of stay away from, or do you sort of like unattractive to an investor?
I mean, look, I think probably, and you can Google sort of as many articles as you want on sort of good founder qualities or a kind of experience. I mean, ultimately, I think tenacity and resilience are really fundamental to the success of any business. Well, so much goes wrong as you're building a business, you're founding it, every day. I saw something the other day of, as a founder, you've got to be comfortable eating no for breakfast every day. Like there are so many things that will go wrong. Some will be your fault, some will be other people's fault. So having the tenacity and resilience to get through that. Now, the difficult thing as an investor is it's difficult to quantify that. I mean, you can show me your traction. I can break down customer acquisition and cohorts and retention rates and all these sorts of things. And I can put a number on that, and I can say above this number is good, below that number is bad. But really, to sort of test for that resilience and tenacity is difficult. And it's why, I mean, broadly, I think we have a slight bias towards more mature founders. So founders, partly because often they then have more experience of the industry they're operating in. So really understand what the problems are and how they can be addressed. But I think also then you've got that kind of age does not necessarily belie wisdom, but I think you can you have more of the kind of life experiences to lean on, and which you can then use to support. But that's not to say we think that we don't invest in young founders. We have a lot of founders in our portfolio who are younger. So it's an ability to demonstrate and be resilient and tenacious in the face of what's going on. And what that often means is that we usually don't invest the first time we meet someone, because we kind of want to have that chance to get to know them a bit, see how they operate, see how things kind of succeed or don't succeed, and how they handle those challenges. That then gives us that sort of like evidence to build conviction on when we're making an investment.
Right, that makes sense. We're almost at the end. I just have two more questions.
Sure.
The first would be, as an international investor in Bangladesh, what advice would you give to other investors who are looking into startup opportunities in Bangladesh?
I mean, the best thing you can do if you've got the time, the money, and the inclination is to go to Bangladesh, because I can tell you all about the energy you get as you're walking around Dhaka, the chaos, the traffic as well, but also the quality of the founders, the sort of size of the opportunity, all of these things. But really, nothing is like what I can do is maybe 1% of what spending 10 minutes with founders does. And this is true in all of the countries that we operate in. But I think it's true for Bangladesh as well. People don't have any kind of preconceptions of what Bangladesh would be like. They often just have no idea, which is good because it's a blank slate. Like, you don't have negative preconceptions. I mean, there may be some, but it's usually basically a blank slate. But it also means you need to kind of fill that slate in. So for founders, it can be difficult pitching to someone in the US who's never been to Bangladesh before and trying to explain to them why they have to build their business in this way. Whereas actually, if you come there and you spend some time on the ground, that really would be my main advice. It's like go to Bangladesh, spend a week there, be prepared for the traffic and the chaos, but also be prepared to be very impressed by the founders that you'll meet. And I think to come away with a sense of understanding why, like us who do spend time on the ground, why we get excited and why we are excited about the opportunity.
Right. Yeah. Book a flight to Bangladesh. That's the
also, yeah. And then you get to try all the great Bangladeshi food as well.
Yeah. Yeah. Okay. The last question that I have for you is, in the next 5 years of Bangladesh, or perhaps even in the global context of things where we are right now with the recession and the Russia-Ukraine war and supply chain disruptions all over the world. Um, what trends do you see, not just globally, but also how do you see them impacting Bangladesh? And if you have any advice for startup founders in Bangladesh or people perhaps looking to found their own startups for the first time in Bangladesh?
Okay, the now, to me, now is a very good time to be founding a startup, because you think like, what are you trying to do? I mean, with a startup, you're fundamentally trying to use technology in whatever form that may be to solve a problem that someone has, which currently is either poorly served by existing solutions or just unserved entirely. Now, what you've got to do is you've got to build something that solves that problem well enough that they're essentially willing to pay for it, and that there is ultimately a kind of a margin in it for you that means you can build a business. Now, I think in times of sort of economic prosperity and when everything's going well, it can be difficult to convince people to change old habits. I mean, they might have been doing this for tens or hundreds of years. This is the way we do it. This is how it works. But at a time when you're facing kind of inflation and supply chain issues and a kind of a squeeze on people's real incomes and disposable incomes, that ability to bring efficiency to the way that they operate and the way they live their lives, I think there's greater sort of economic incentive from their side to test your solution. So I think now is a good time to be building to be building a startup and a new product or service. The key thing though is also to make sure that problem's big enough and that kind of people are willing to pay you enough, or that the business model and the economics, the unit economics make sense. It might be that actually there is a very significant problem, but it only affects like 10 people. It's like, okay, those people are going to maybe be willing to pay you quite a lot, but that's not really going to be a business that gets me excited as an investor. So I mean, I don't have much of a crystal ball in terms of looking at where these kind of supply chain issues or the impact of AI, how businesses and individuals operate and interact with each other. I don't have a sort of fantastic crystal ball, but what I do think is that in this current environment, now is a good time to be building a startup. To be doing so in a sustainable fashion with a long-term view, that it's really something that's going to take you to probably 10 years to build. It's not going to be an overnight sort of 2-3 years, make a load of money, ride off into the sunset and retire on the beach. It's something that's going to take kind of hard graft as much as anything, because it's going to take Bangladesh that long to really digitalize, to catch up with comparable emerging markets as well. So that would be my kind of advice or 2 cents on for people thinking about founding a business at the moment.
All right, thank you. That's actually very interesting, because I think whenever I ask people this, there's a lot of fear about the current climate, and there's usually a lot of hesitation or sort of risk averseness. So I think it's quite refreshing to see the sort of optimism that, like, reframing it to look at it as an opportunity.
Yeah. Well, you've got to be a bit crazy anyway to want to found a business and be a founder. Like it's not a rational, normal thing to do, because you're not going to sleep a lot. You're probably not going to eat very well. You're going to be stressed the whole time. You've got people relying on you. You've got things going wrong. It's like, it's not a rational thing to do. But if you are that kind of person and you have that urge, I think now is a good time to be doing it. And it's going to be hard work, but that doesn't mean that it isn't something that you should do.
Right. I love that description of that. Sounds like parenthood. Yeah, that I think brings us to the end of the episode. Thank you so much for your time. I think this was such a great episode, and we got so many good insights from you. I think that.
Thank you so much for having me on. Really appreciate it.
Thank you. With that, I think we can wrap our episode. Okay.